Alright, so we'll be working on Chapter 4, Exercise 5. In this problem, they want us to calculate the net income on a cash basis and also on an accrual basis for the Wild Horse Company. So we'll start by reading here. It says, in its first year of operations, Wild Horse Company recognized $33,700 in service revenue. $7,800 of which was on account and still outstanding at year end. The remaining $25,900 was received in cash from customers. The company incurred operating expenses of $19,400. Of these expenses, $1,300 and $13,600 were paid in cash. $5,800 was still owed on account at year end. In addition, Wild Horse prepaid $2,680 for insurance coverage that would not be used until the second year of operations. So then it asks us to calculate the first year's net earnings under the cash basis of accounting and the first year's net earnings under the accrual basis of accounting. So for the accrual basis, it's pretty easy. We just look at total revenues and total expenses for the year that are based upon the revenues that were received in that year. So we wouldn't include the $2,800 or the $2,600 for the prepaid insurance on the accrual basis. We would include the revenue that they received, so $33,700, and we would include their expenses of $19,400, which gives us a net income on an accrual basis of $14,300. And then revenue on the cash basis, we only look at what cash actually changed hands. So they paid $25,900, or they received $25,900, and $7,800 was on account. So the only cash they received was $25,900. So we put that in for our revenue. Then expenses, we have the expenses that they paid in cash, which are $13,600. Since the $5,800 is paid on account, that wouldn't be under the cash basis. And then since cash exchanged hands here with the $2,680, that would be included in the cash basis because the expense was paid during that year. So we put in our $2,680 there. So our net income on a cash basis is $9,620. And then for part B, it says, which basis of accounting, cash or accrual, provides more useful information for decision makers? And the answer to that is accrual, because it actually gives us a real idea of what expenses and what revenues not only transacted in that period, but also ones that should be included in the information. So this is a more accurate account of the Wild Horse Company's net income for this period of time.